Hey everyone, welcome to State of the Industry. I'm Chris Gaines, co-founder at The Den, and I'm here with our resident blockchain expert, Svet, and our awesome advisor, Jason, over here.
Hey everybody.
So today we're hopping into some interesting new developments in the space. Coinbase has been making some really questionable moves, according to some people. And there have been some kind of reports that have come out that toss in some interesting statistics that we're really going to kind of dive into and see what they actually mean. So without further ado, let's hop straight into it. So first things first, Coinbase has actually spent $13.7 million on a blockchain intelligence startup called Neutrino. And it's come out that the founders of that company were also the owners of Hacking Team, which was a company that sold offensive surveillance capabilities to governments, potentially authoritarian regimes. So keep that in mind. And obviously, as this type of information comes out, it stirs up a lot of fuss in the crypto news medias. And people are essentially accusing Coinbase of spying on their customers. So, shoot, what do you guys think about this particular situation?
Well, we'll start. Okay, that's me. First of all, I don't see anything terrible in that news. Moreover, if we really want to see our space developing and we really want big players come and starting buying our crypto, which we're now sitting on, we can expect that majority of the players wanted to establish the same rules. They are playing on the traditional type of markets. And that means QIC, AML, and all of these type of thing which nobody, of course, approves in our circles, but it's very important for those players. So if Coinbase wanted to establish itself as a first and primary route in and out of the cryptocurrencies, specifically in the United States of America, obviously they have to comply with the regulations. So no surprise here to me. So what do you think?
I'm actually surprised by this. Various reasons. Number one is Coinbase being as big as Coinbase is, don't they already have blockchain intelligence going on? Shouldn't they already have this type of information? I mean, if you're doing public chains, which public projects, which most of the stuff that's listed on Coinbase is a public, public chain, they should be firing up nodes and pulling that data out and have all the data ready to go themselves, right? And have somebody on it. Second point. 13.7 for blockchain investigation. That seems like a startup. That seems like a very low valuation. So it seems to be a very small project that they've picked up here, which also confuses me. You know, if you don't have this already going, why are you spending 13.7 on this? Yeah. But on top of like what Svet's saying is, they need solutions of some kind, and this company, from reading their website and things like that, looking at them earlier, they help police departments and governments and things like that to report on blockchain stuff. I don't know. I wouldn't say Coinbase is the first to have this type of information. There's other companies out there that do this. BigQuery just did a big, multi-chain thing with Google out of Thailand and South Asia, and that's interesting. Coinbase needs apparently somebody that's also providing that type of information, but I would have already imagined that Coinbase already had this information.
Yeah, I mean,
kind of surprising.
What I think about when I see the 13.7 million, it definitely stands out as a relatively small acquisition. So I mean, it very well could be like a hiring by acquisition. Maybe they really want to get to the Hacking Team founders.
Yeah, it could be a management play.
Or it could also be maybe the company has some fancy IP that Coinbase wants to add to what they're already doing.
What appears to me, you guys trying to say that Coinbase actually bought that company, not actually to buy their solution, by the people who can build a new solution.
Potentially.
And this solution can be something like a Cambridge Analytica, right? Yeah. Which going to be collected information about us, poor users, and then they're going to be selling that information to any interested third party. Because if it is true, it will little bit change the narrative. Because one thing is to provide the information which governments and agencies need to assess the threat for the country or whatever. Another thing is to collect our data and then sell it to the third parties. Because I do not endorse the second thing at all.
Absolutely not.
Yeah, that's interesting point.
Sure.
All right, so let's move on to the next point. So the International Data Corporation, IDC, recently published a report that says during the 2018 to 2022 period, blockchain spending, that's how they described it, within the industries, about 19 industries, primarily IT, will spend on implementing DLT solutions. That's projected to grow 76% annually, reaching $12.4 billion by 2022. And most of the 2019 growth is looking to be primarily within the USA at about $1.1 billion, Europe at $674 million, and China at $319 million. And one of the interesting things that comes out of this report, they're saying the manufacturing and resources sector will see the fastest growth in blockchain spending, and the banking industry will be the largest investor. So what are you guys' thoughts on this development, or what they're saying about this?
Well, at first, I am excited. At first look, I'm excited about that number because it shows we have some growth, at least in the traditional blockchain implementation, which of course doesn't mean that it has anything to do with cryptocurrencies. But still, people using blockchain, and those people have money, and hopefully at some point of time they start to implement some kind of solutions which involve coins, tokens, and then we have all of this nice universe of pump and dump going repeating itself again in the industries. But what I'm also thinking is that we don't really understand from that report what that blockchain
What the definition of blockchain spending really
spending
is. Right?
is. Because imagine any big corporation who have very large RT department, and this large RT department can say, okay, we need more and more people, we need more resources because we want to make something amazing. And then they don't really want to build anything except what they already did build. But they just put a new label on that and call it blockchain. And here we go, we have excited management who inspired superficially about that blockchain thing, and they started throw money on top of that, and they start reported as a blockchain expenses looking good in the eyes of their shareholders. That's maybe part of that. So what do you think, Jason?
I think it kind of continues off of like last week's topic a little bit. Like what does this line item mean? What does this sentence, mean? Like what's all packed into this?
Yeah.
What are we talking about?
Right. Yeah, exactly. What are we talking about here? But it does look positive, to have banks saying they're reported banks that are going to spend, this much money on doing blockchain development for manufacturing. Manufacturing, when I see that, I think, supply chain, the first thing that comes to mind for me, which I do think is going to is one of those real things that one of those blockchain solutions that's a real world solution that blockchain can use to help fix manufacturing in particular. Now, do I think those numbers are correct? I don't know. I think it's just a projection, an estimate, and I'd like to see that. That would be nice.
Yeah.
But,
and see, I'm going to take a little bit of a cynical route and just, assuming these numbers are correct, the way I see it, blockchain spending is still these companies doing research and development. They're still, for them, it could be their R&D department saying, okay, let's play around with this. Let's see what happens. Let's try and, find a solution for our company that is going to save us money, make us more money in the long term. And if we're looking at, Svet, your idea of the 10-year long bear market, and if we're playing into this, I really want to see blockchain profits, if that makes sense.
That's make very, very substantial change to our
that's
perspective on this.
That's what I want to start seeing, and I think that's what we really need. And I understand, like it's good to see supposedly a lot of companies are investing into the technology, are working to find those solutions and implement them. But at the end of the day, the only outcome that realistically matters for the growth of the entire industry is, especially if we're looking at enterprises and businesses, is how much money are we saving by moving towards a blockchain solution to track our supply chain as opposed to a different solution, or comparing what companies are currently doing already to track their supply chains versus adding blockchain. Are they just going to spend more money in the long term to build it up and then it not be as effective? So
I think it's an excellent point, because think about this quorum JP Morgan produced for the public consumption, mostly probably because have anybody seen this quorum like live? Maybe it's just a white paper. We were told that this is kind of system. Have any other banks except some internal mysterious JP Morgan department use this quorum? So maybe the same here. Maybe all of this growth is going to be growth in the number of white paper produced in the industry, which is nice, as you said. That's what I'm saying. Perfect, very good point. Maybe just research and development sometime in the future.
And, when we saw 2017 go crazy with cryptocurrency, right? And it's because people saw all these gains, right? Once gains are happening, everybody wants to get on board, we say and we hear often, that supply chain is, a real world case of blockchain, or use case for blockchain. Mm-hmm. And have we seen it implemented and actually saved somebody money when they're like, hey, I've made, in a report that says I save money with this.
Show me the money.
And if that were to happen sometime soon, everybody'd get on board.
Exactly.
So we'll see.
Yeah, that's what I'm looking forward to, and we're definitely going to be looking into more supply chain stuff actually further on in this episode. So let's hop straight into it. All right, next topic. Okay, Carrefour SA. I'm not sure if I'm pronouncing that right. French company.
It's a LTD in French.
Okay. What's that said?
Welcome to my world of knowing everything.
So this is a company. They're a multinational retailer, and they pulled in revenue about an eighth the amount of Walmart. But they have a similar amount of stores worldwide.
Actually, twice
as many
more.
stores.
Twice as many, because they're spread all across the world, and Walmart is mostly concentrated in the US. In US and a little bit in Europe.
Okay, so this company has issued the Carrefour Quality line, which is essentially they're using blockchain to track the delivery of microfiltered full-fat milk from producers all the way to customers using QR codes. So what do you guys think about this initially I'm immediately comparing this to the Food Trust Network, Walmart's Food Trust Network. So
first of all, because I read it in actually original French, and there is a part which says that it's not their first project. They already implemented that for poultry, for some other grocery products, and this filtered milk, it's a second or like a third or fourth stage of the blockchain usage for Carrefour needs, supply chain management kind of system.
Okay.
Which tells me, surprisingly actually for me, that the big companies already take some quite a time and energy to implement their solutions without actually letting most of us know about that. That's very positive. At the same time, I cannot restrain myself from kind of critique, because knowing how French companies operate, as a former international auditor, I also audited a couple of the French companies in my life. So that's very bureaucratic organizations, and sometimes they tend to say something like that. Okay, guys, we have a very old and proved solution which proved already itself to our kind of management, to our shareholders. Now let's rename this solution to blockchain, but of course we cannot completely lie to anybody, but we put a small module which gonna work like this funny blockchain thing. And actually that report said that they use QR codes for this one, right? So QR codes actually very kind of old solution
Extremely.
because now we have like a radio frequency marks and all of that. So obviously they took that from the old system, and now probably it's again, it's my theory,
Yeah.
but it's maybe right, maybe not. And they put on top of that some of the blockchain feature. I'm kind of try to look at that from the critical point of view. So what do you think?
Origin of goods has been a topic long before blockchain was. We had it with organic foods. Like, how do we know the food that is actually organic? Where did this come from? We've seen it with coffee. Like, is this, sustainable coffee? Is this, who are the people that got this coffee for us? Where did these Nike shoes come from? We have all these. Some of them have social impacts on top of them as well. And one of the things of the blockchain was to make things trustless. And in the old systems, we've got. We have to trust that where they say this stuff is originated from is where it's actually originated from. Mm-hmm. And with blockchain, with the immutability, I think that supply chain can tackle some of that, and make it more trustless. Like, yes, we can show you exactly where this came from, and here's how. But with those systems, I've seen a couple of them being implemented, and they've always been hybrid. So it's not like the whole system itself is on the blockchain. Just parts of it might be on the blockchain. I know this week we've got a lecture series on Wednesday that we're going to be doing blockchain. Supply chain, yes, supply chain for the blockchain. And that particular company, Kratos, they use sensors, and since it's on blockchain, you don't need to have the information at every single point. Like if they're ordering from overseas, you can start the sensor at the point of origin, but you can collect the data as it goes through its delivery system. And at the end, collect all. It can tell the story and make that immutable, which is interesting. But that's only that part of the supply chain. It's not the full supply chain that's on blockchain. And so yes, with this too, it sounds like they've got a system that's probably they've had it in place before, but they're gradually tuning more into blockchain space.
Yeah, and it's interesting. I'm glad that I'm learning about this now because. And that might actually make a lot of sense if you're thinking, oh, maybe they just took a small blockchain portion and added it on, because this sounds like a very similar solution to IBM's and Walmart's the Food Trust Network, which is completely based on Hyperledger. So if they're doing it that way, I'm losing my train of thought here. But yeah, go ahead.
Yeah. So what also is kind of remarkable that may be some kind of trend, because what we have now is majority of the blockchain solutions is in a supply chain. At least all of these use cases which we can prove. Because one of the most popular questions which I receive, and probably you guys receive on your conferences or seminars, people asking, why don't we implement centralized traditional solutions and solve the same supply chain question? Yeah. Because there is obviously very, very substantial bottleneck for any type of blockchain solution, which is, of course, saving data, right? So we spend much more resources, much more time, and actually we should do data distributed, even if this charting solution, it's still like maybe 10x more time to brought together, send it back to the same users in a consolidated form, and through this kind of unreliable type of communication networks, when we have all obviously blockchain spread, maybe spread all across different countries. So the question is, why blockchain? And the answer, from my point of view, as one of the important competitive advantage of blockchain is creating trust. Because of course you can build your own system, provide your own supply chain system, and say you have different customers and different suppliers in 3 countries. But even if you give all of them their own secret keys, right? And assumption is that your IT department does not have any backdoor to those databases, because this IT department actually built a centralized solution, and they
gave it to them, access to it.
They provided the centralized solution to all other involved parties. So the question is, why this third party going to be trusting your IT department? And in case of blockchain, we have already several centralized, well, several, I wouldn't say famous, but trusted, I can use this word, right? Solution
You have to
provided.
you have to trust a certain point of the
A
process.
certain point of, at least we can look at their code, right? So we can, we already have at least 2 years of history for most of them. And we know that their solution, at least not hackable from kind of student computer in the nearest dormitory of the technical university next door. So that's a point of going blockchain. Trusting to something which most of the people already trusted.
Yeah, and the thing that I always come back to when I'm thinking about these supply chain solutions is the fact that there's still that inherent like input bias. Like that's the one portion where you have to trust the other party. That's what I feel is kind of like the holy grail of having this full-on end-to-end solution where you don't have to worry that I think Jason, you were mentioning that someone is actually they'll take a truck that has a temperature sensor in it and they'll put it in a chilled warehouse just to make sure that the temperature sensor is reading correctly when maybe there was an error or they left it outside too long, something like that.
Garbage in, garbage out. So and that's been a plague for supply chain for forever. So I think the blockchain solutions are trying to figure out ways to figure that out. But anytime you have human, interaction, you've got a chance for garbage going in.
So maybe Neutrino from Coinbase can at least audit all of these points and find the odd situations. Where
and I think in some of the supply chain products that I've looked at, they're looking at not so much proving proof of origin, but they're trying to find where these points are in the supply chain and be like, okay, this is where this issue's happening. Like who's cheating? Here they are. Our sensor tracks so much stuff, and we can pinpoint where in this delivery system is this getting screwed up, and that's where we need to look. Where this is where our losses are happening. This is where our medicine is going missing, and Nurse Jackie is selling it on TV.
So it looks like the appearance of blockchain or implementation of blockchain won't solve the problem of the third-party audit. Right. So what you're saying is that we still will need that solution, like a third party looking, but that time not looking at the
whole thing. So blockchain, it seems
not
like
on the documentation, but
it fixes a specific area of the supply chain at the moment. I think it's optimized for a certain.
And then it gives us also timeliness. So because audit is usually like 3 times a year, right? You cannot do audit realistically every day, right? But this blockchain, it's everyday audit. So if there is why not Neutrino implemented a solution for any type of redistributed or distributed supply chain, and then, as you said, they look for inconsistencies of data. If suddenly product from that area became too fresh, or maybe it rings some bell, right? Maybe somebody monkeying with data there.
And building off of that, it's just to think like. The knowledge of all the suppliers that if they know that they're switching to a blockchain tracked supply chain, then just that knowledge alone could be enough of a push for them to think twice or 5 times before they try and fudge data on the input, because they know that if they mess up at all in their bad inputs, then it will show up and will always be available for someone to find. So.
The same effect we put this, I know you've seen it in San Francisco. They put these stupid robots on the street, which is supposed to guard some
night scope, right?
Night scope. Yeah. But most effect of those robots are psychological, right?
Yeah. That's 100% it.
That robot cannot arrest you, right? Even if you're gonna break this storehouse or whatever this robot is guarding, but psychologically it's kind of watching you. Yeah. Same with blockchain. Blockchain watching you. So don't mess with blockchain.
I think we definitely have a good idea of what's kind of happening right now with that situation. So let's move on to the final topic. Okay, So the UK Financial Conduct Authority, it's a regulatory body similar to what you call like the UK's SEC. They employed Kantar TNS to conduct a research survey on the awareness, understanding, and purchasing habits related to crypto assets of UK consumers ages 16 and up. So this survey spat out some really interesting specific findings that I think are kind of interesting we should talk about. So they estimate that out of the 2,100 survey respondents, only 3% had actually ever bought a cryptocurrency. Only 7% of those who haven't bought any cryptocurrencies so far would consider buying them in the future. And then over 70% of those surveyed haven't heard of cryptocurrencies or didn't know how to define one. That's a good one. Only 8% of all cryptocurrency owners completed deep research before purchasing. Sad but expected. We'll talk more about that one. And 16% did no prior research. And none of the respondents reported actually borrowing money from financial firms or friends or family. So what do you guys think about? We can go through them and pick out whichever kind of these findings stands out the most.
Yeah, what strike you the most? So I basically automatically, I don't know, I think about these 3%, which strikingly high number for me.
Really?
Yeah, because if you take 3% of all the populations of the United States of America, of the European Union, which is, and this research, I assume it's for the ages 16 plus, right? So it's a consumer 16 plus, and I think that the high ceiling is for about 40-year-old people. So if you take that population in the United States of America, if you take this population in Europe, and if you take in China, the total number of cryptocurrency holders is for about 60 million people, which exceeds at least 3 times my previous estimates, which is about like a 20 to 25 million people. So what do you think?
Yeah, I'm with you on that, Svet. That's a really big number.
Seems high.
Yeah. 3% of the population using cryptocurrency, that was in their sample size, but 3% is a huge number. I don't think we're at a 3% adoption rate by any stretch of the imagination. That's
so worldwide is 200,034,034. So
based on that 3%.
Yes.
Yeah, that's we live in one of the most crypto blockchain like central places in Silicon Valley.
That's true.
So, and if we think that that's too high, then I think that means something.
We have pretty small community in Silicon Valley, right?
Right, exactly.
We know
pretty much everybody.
Well, let's say 80%.
And this is supposedly like the epicenter.
It's
right?
supposed to be, because many people fly in, fly out, but more or less, like, I don't know, 2,000-3,000 people stays here, right? I think if you take out like people who just work for big corporations, just interested in crypto, so we have left.
Now, the one that I like or stands out a lot is the 70% of those surveyed had never even heard of cryptocurrencies or even knew how to define one. So that gets me thinking about if you think overall across the world, or maybe just start with the UK, like what are the different vectors that someone would ever even learn about cryptocurrency, right? You can think there's, if someone directly tells them, so they have a direct connection to someone who's involved in it. If they see something on TV, but realistically, how often, unless you're on very specific channels, are you ever going to see something about blockchain or cryptocurrency on TV? You have general, like the internet. If you're on YouTube, you're probably not going to see cryptocurrency related stuff unless you're already leaning that way. And then maybe if you're buying something somewhere and they accept, Bitcoin or whatever it might be, those are the only kind of major places I think that someone would have access to learn about that stuff. And out of all those places, it's you're not hearing about blockchain or cryptocurrencies often.
I probably can comment on that. I doubt that there is maybe something because as I heard what you read, it's 70% of people who either don't know or don't know how to define. So I think majority of the people
Might have heard of it.
might have heard of it, but they don't know how to define it, because I've heard that more than other reports I read, it was like 80% of all the people already know what cryptocurrency is, because
Meaning they've heard it in passing. In one
yes,
of those channels,
probably it's
but never took that extra step.
Yes, like
to
lost
learn
in
a
translation
tiny
or
bit about
something.
it, Yeah.
I think that I think 70% of people don't know how to define what cryptocurrencies is. That's what I'm ready to believe. But 70% of people who never heard about cryptocurrency in United Kingdom, I know that.
Well,
sure.
if you interpret it that way, then it means that when people do hear about it, they have no idea why it matters to them, why they need that versus a dollar bill or the UK the pound.
Well, maybe yes, maybe they they know what I'm talking about. It, for example, remember that report or I don't know news when Facebook. 5 people from Facebook start talking about issuing their own cryptocurrency. That's not cryptocurrency they're issuing. That's they issuing their own token.
Yeah,
that's a big, huge difference. I think that majority of people don't even know the difference between token and coin, right? So that's where we have the 70%. And nothing strange about that. So what do you think, Jason?
I find the point humorous that such a percentage bought cryptocurrency without even knowing
research. I was going to get to that one next.
what they were even buying. You know, like
That's normal.
I guess people do that all the time. They just buy
also
stuff
true.
just to buy stuff.
So it goes both ways then. If only 70% couldn't know how to define them, some of those 70%, well, I guess they didn't buy it, but yeah, there's a large percentage.
there might have been
of
some overlap. You know, there were different points.
Yeah,
So
it's like don't care about. It's just like I'm gonna throw money at something.
I think majority of people in their life bought some types of stock, right?
Yeah.
So what stock have you ever bought except cryptocurrencies?
yeah, I mean, I have, but I always
Which
do
one? Like a
research.
Shell? I don't know.
No, like Netflix. I buy
Okay,
Netflix
I
stock.
see. I won't be asking you about that. Oh yeah, say many people buying stock of oil companies. Doesn't necessarily mean that they exactly know what is downstream or upstream.
No, but
Right? The difference between those two, that most companies now involved in more like in upstream than downstream. So all of these technicalities, if you buy in some industries, it not necessarily means you have to understand that industry. But of course, it's
to a point,
better to do.
But that's a good point. Like I feel like if you think of the stock market, people will invest in the companies that they like just because they like them. That is a true fact.
Yes.
Like, I like my MacBook. I'm gonna invest in Apple.
Yeah, it's growing.
But
like a
also,
cow.
you kind of have to feel like that's somewhat of a somewhat sound investment, just because if you are investing in Mac, you know how Apple operates. You know that they put out products. You know they're most likely not going to crash the next day. With something like, at least with the bull runs that we've had with Bitcoin, if you have this random this first time you're hearing about it, this new asset, whatever, that comes into the field, and your only things to go off of are, other people are making money, then I still feel like that's definitely not a sound of an investment for you to at least do some research into versus something that you have an innate connection to. Like, I bought plenty of MacBooks.
Well,
all my friends use them. Like, I feel like it's still like there's definitely a difference in the.
Here's the point: be careful what you wish for, because it's a classical stock market theory. Tells us that there is a huge base of the shareholders who shouldn't even have to know what they're buying, because as soon as you start digging to be specialist in that market, you immediately start to overtrade. Specifically, if you are not a professional investor.
Yeah.
And that's actually what's happening in crypto world now, because
that's the same
everybody in crypto world, we are specialists. And we're trading every day because we think that we understand what we're doing. And that's great. That's tremendous instability. So the point being, in a normal type of stock market situation, we have to have very large base of the consumers, of the stockholders, which don't actually care about that technicality, about what's happening. They're just buying it because it's the right thing to do.
So you're basically
It's maybe not a very popular point of view, but that's the truth.
So you're saying ignorance is bliss, basically.
Absolutely, absolutely. That's the same as all the economy is based on the ignorance. United States dollar is based on ignorance because if you try to dig deeper, you get to the cryptocurrencies because immediately when you understand what United States dollar is, you sell it, go to the cryptocurrencies. But of course, it doesn't mean that you have not to look into the deeper into the issue if you are first comer to the market, and specifically if it is a kind of the market cryptocurrency is now, because it's a new market, very risky. We cannot compare it to the even banking, real estate. It's thousands of years not for banking, but for real estate. And people can buy pretty safely. Of course, there is a short-term fluctuations, but long-term, real estate is going up in value, and so on and so forth.
A lot of stuff is going on.
And that's a capitalism. Capitalism is based on the consumerism. People buy stuff. As soon as people stop buying stuff, we get back to the feudal type of system where we are self-contained and we have small villages producing everything inside. We don't need anybody. Actually, we can exist for a very prolonged time. Feudal time lasted for 600 years. So.
And
but nobody probably want to return to that, right?
I would highly doubt. Well, there's some.
We won't be able to make YouTube.
But you were saying earlier, and it might apply to that point, is that probably a large majority of people who did invest maybe ignorantly, did not put that much money in relatively, right?
Right.
About I don't know, a solid. More than 50% of people who invested in Bitcoin probably put less than $1,000.
Yeah, that was part of me trying to contradict to myself that I'm 10-year bear market guy, so I'm known for that. But as soon as I start playing with that theory, there is one counter theory to that, which said that yes, we did have that market in 1994, 2000, when it was very prolonged bear market. And the point being that at that time, everybody who wanna buy into this new internet craze was able to do that. They simply have a physical time in means and legislation in everything, and that's why those markets took so much time, 5 years to grow. And then it was crashing for about 3-4 years, right? You remember it was like first, and then till 2005, 2006, that market was continually going down. And then only after Facebook and other social networks become listed in the New York Stock Exchange and everywhere else, people starting buying back because they see the results. So my 10-year market theory more or less based on that type of pattern, except that there are other arguments for that. But counter argument is that in 2017, most of the people, people who already invested in crypto, these 20 million people, simply didn't have physical time to buy into. And they spent no more than $1,000 for these cryptocurrencies. $1,000 is not such a huge sum which can ruin even like average type of investor, specifically in the Western country, right? So I'm assuming they're still sitting for about 10,000 cash, not invested. Of course, I'm not talking about all the markets. There are people who just go crazy selling houses and so on and so forth. But it's a very, very tiny number of tiny percentage of all these consumers. So that number, that statistic which you gave us, which says that none of those guys actually use credits.
Or borrowed money.
To invest. Confirm that theory.
Yeah. No.
So it means that maybe we can still have another bull run based on the same base of of the crypto holders because they still have money to invest. They just wait for this.
Relaxing here now.
Yes, they wait when fear come out, but money are there. They're waiting. Because we cannot realistically expect that all of these industry giants are going to be investing in cryptocurrencies. They're going to be investing in blockchain. Yeah. But will they be buying Bitcoin? I doubt so. Specifically, I don't know, in Binance? No, they will do it in over-the-counter market. Or they will try to build their own currencies.
Well, everyone's
So what do you think?
Or they'll just show it on their P&L report at the end of the year and drive their stock up.
Excellent.
And we won't see any of it.
Excellent.
What was it as blockchain revenue?
Yeah.
Yes.
Blockchain profits.
Blockchain profits.
Blockchain profits.
Yeah.
What we want to see. So
That's a beautiful point, by the way. That's a genius point. Actually, they can get into blockchain without buying and even building any crypto. They just as said, they can say that we have new know-how or potential revenues from the blockchain solution
our
for our-
savings on our supply
and just put
chain.
it on blockchain and then get to the credit market and just borrow
Yeah.
here. And the
going
Federal Reserve just print this money, give it to them. Wow.
Everyday people in the crypto space won't see any of it.
Yeah, they never have to touch it. It just gets rolled into like a typical company report.
Perfect.
That's interesting.
We just give you a new piece of absolutely invaluable insights. I mean, industries. I'm talking to the industry guys.
Crypto people are going to become regular auditors.
They're going to have to.
You know, that's what I'm doing. I'm auditing everybody now. I'm watching.
Yeah, well, that's a solid point. I think that's like a great way to end today's podcast. Yeah, so with that, this has been State of the Industry. Again, I'm Chris, co-founder at The Den. If you guys are interested in going to learn more about supply chain or any of our past lectures, we have amazing lectures that we've been doing every Wednesday at Hacker Dojo. You can click the link in the description below where you can sign up for that. And we do live streams and in person. We got free pizza if you come in person, so I recommend showing up so we can meet you and have a good chat. If you're interested in taking some blockchain classes and diving a lot deeper and understanding how you can get involved in this supposed growth over the next 4 years, then there's another link in the description for that. You can learn how to become a blockchain developer. Svet?
As always, you can find me on the internet. You just type there Svet Sedov and you find all of my publications and my media accounts and the social networks. You can also go to my Telegram group, which is Ask Svet About Crypto. And of course, you can get to Den, where I am the official expert and serving the community 24/7. So,
And that'll
thank
be in
you.
the description as well.
Yes, absolutely.
Me closing out. Well, we also have beer on Wednesday, so not only pizza. So stop on by in person, see us Wednesday, any Wednesday over the next. Gosh, how many more weeks we got? Like six,
We got
5 or
something like
6.
that. And then we'll be starting up a new series at some point soon. So
come check us out.
awesome! Thanks again for listening, everyone, and
Thank you.
watching. And we'll catch you next time.
See you next time.